Rising trade tensions between the US and India hurt sentiments on the street. Energy and realty are the big drags while metal stocks remain resilient.
RBI clears the appointment of former Axis Bank Deputy MD Rajiv Anand as MD and CEO of IndusInd Bank for 3 years. CNBC TV18 first reported that he was the front-runner. The stock cheers as the move, as focus now shifts to key management changes and the road ahead.
CNBC TV18 learns that the Finance Ministry and SEBI are in talks to curb excessive stock options trading, a shift away from the weekly to fortnightly expiries, lower margins for cash trades and a cut in STTs may be considered to reduce speculations in options and increase cash trades.
US President Donald Trump has said he will substantially raise tariffs on India given its buying of Russian oil. India calls the move unjustified and unreasonable, pointing to purchases by EU and US from Russia.
The RBI's Monetary Policy Committee will announce its interest rate decision tomorrow. The CNBC TV18 poll shows that the market is divided between a cut and a pause. ICICI's Global Markets head B. Prasanna tells CNBC TV18 that the market may be happier if the RBI does not cut rates, but indicates dovishness by cutting inflation forecasts. Good afternoon, you're with us here on Business Lunch. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vamakshi Thoria. Vamakshi, good afternoon. Welcome back after a day's break for you. Well, but the markets are also taking a bit of a break after the rally that they saw yesterday. And it's quiet, if you could call it that, because a 90-point fall could be just another day, despite the headwinds that the country currently faces.
Exactly, Hormas, bang on. And in fact, with the kind of developments that took place with the US threatening to increase the tariff rates on India, we could have expected a bigger fall. But at least for now, it's not such a great fall as you were pointing out. It's in fact a 45-point recovery from the day's lowest points. So for that matter, the markets are in the red, but, the fall could have been much greater. The mid-cap end of the market is, however, taking a knock. It is underperforming the benchmark indices. The mid-cap index is down almost 0.6%. This is reflected in the advanced decline ratio, which is leaning a little more towards the declines for now. It's almost 1 to 1.5. But apart from that, we have lots of stocks in focus. Take a look at Gokaldas Exports. Last I checked, the stock had taken a knock in today's trading session. It was down almost 8%. Given the kind of developments that have taken place between India and US, Gokaldas Exports is the stock that I'm talking about. There you go, 8% lower for this counter. The other counter that is not doing too well is Welspun Living. Again, this company does have some exposure to the US markets and does have some sort of supply to some of these big retailers there. So therefore, Welspun Living is also taking a knock in today's trading session. Of course, we have a whole host of numbers that are a whole host of stocks that are reacting to numbers. Take a look at Triveni Turbine. That stock is down and out in trade today, almost 7% lower. On the flip side, Godfrey Phillips is is trading with a gain of almost 10%. Hormas.
52-week high for Godfrey Phillips after its results. Very strong performance at that. And Tanla Platforms has moved to the highest point of the day, 9% higher on that stock as well. And some of the other earnings reactions, Sanofi Consumer at one point was up 15%, and that stock has cooled off a little from the highs of the day, but still holding on to gains of around 9%. So good going for Sanofi Consumer as well. On the flip side, though, as Vamakshi was highlighting Gokaldas, there are a lot of other names like Thomas Cook is down almost 6% at the lowest point of the day. And most of these apparel names with a significant exposure to the US are struggling in today's session as well, be it SP Apparels down 4.5%, Welspun Living, as Vamakshi just mentioned, and a lot of the other names, be it the likes of KPR Mill or Arvind Fashions, all of them not doing very well for themselves in today's trading session. So that is the state of the market currently, still around 90, almost 100 points lower on the index, but it continues to meander in a very narrow range. But the big news break from last evening that was confirmed was the CNBC TV18 news break, of course, and that was the Reserve Bank of India approving the appointment of Rajiv Anand as the MD and CEO of IndusInd Bank for a 3-year period. Ritu is here with the big takeaways from that announcement. Ritu.
Well, big development for IndusInd Bank with the Reserve Bank of India approving Rajiv Anand's name for the MD and CEO position for a 3-year term effective the 24th of August. We were the first to report that Rajiv Anand was shortlisted by the board and was a front-runner for the position on the 27th of June, and now it is official. A chartered accountant and commerce graduate, Rajiv Anand is a financial services veteran with over 35 years of experience, known specially for his expertise in capital markets. He began his career as a trader at HSBC and joined Axis Group in 2009 and became the founding CEO of Axis AMC. Since 2013, he's been on the board of Axis Bank, where he headed both retail and wholesale banking and rose to become its deputy MD in 2021, retiring just a few days back. And now he steps into a bank which is at a crossroads. IndusInd Bank is recovering from a massive loss in the fourth quarter, its worst ever, driven by accounting lapses. It bounced back in the first quarter with a profit, but the damage triggered a string of senior-level exits. The bank's chairman, Sunil Mehta, though, has assured investors that legacy issues are behind and the impact of all these irregularities has already been absorbed. He also outlined a 5-point focus for the bank, including a profitability-first approach, cost discipline and a focus on recoveries. So when Rajiv Anand takes charge, his task will be cut out, and it is a tall order. First and foremost, of course, to stabilize the ship, rebuild the bank's reputation and restore stakeholders' confidence, fix the internal control systems and ensure a sustainable return to profitability while cleaning up the books as well. Equally important will be to rebuild the core team. The bank has been without a CEO and deputy CEO since late April and is currently being run by an executive committee. He must also execute the 30,000 crore rupee capital raise to make sure that the balance sheet is strengthened while also managing the ongoing fallout from the accounting lapses, the MCA probe being the latest.
Well, thank you so much for that, Ritu. Thank you for putting all of that into perspective. But moving on then, let's put the spotlight on Tata Motors, because the company has announced the appointment of P.B. Balaji, its current CFO, as the next CEO of Jaguar Land Rover with effect from November 2025. He comes with 32 years of experience in the automotive and consumer goods industry. Balaji will succeed Adrian Mardell, who is set to retire upon completion of its contractual term.
That is the developments at Tata Motors. You can see numbers of Alembic Pharma flashing at the bottom of your screen, a 15% jump in its net profit, a 10% revenue growth as well coming in. So numbers have started to trickle in as we speak. The stock looking to recover from the lows of the day. The EBITDA is up 19% as well compared to last year. We'll get to the margin picture as well, and it's 130 bips expansion, 16.5% compared to 15.2% last year. So overall looks like a steady quarter for Alembic Pharma. Revenue growth, margin expansion as well. We get more granular details on that with regards to its US sales and some of the other aspects as well. But the stock that has been doing well, we spoke about Godfrey Phillips at a 52-week high today, strong revenue growth in the quarter, and Mangalam is joining in with the fine print of how the numbers are. Mangalam.
Well, incredible numbers, no two ways about it. You know, if you told me that this quarter there would be a company that did revenue growth of 38%, with a 25% profit growth, the street would take that with both hands, and that's exactly what we're doing with Godfrey Phillips as well. And this at a time when we had a peek into what the industry is likely to do, with the leader ITC reporting their cigarette volumes coming in upwards of 6%, which was also a multi-quarter high. But Godfrey has gone ahead, and as it has done over the last 10 to 12 quarters, one step ahead and continued to gain market share. What's important is that, when you're growing revenue at 38%, even the leaf tobacco inflation is not impacting their margins so much. Yes, the EBITDA grew 25%, a lot slower than their overall revenue growth, but 25% itself is a lot higher than what a lot of the other companies have reported so far as well. So despite the margin compression from 25% to sub 23%, the street likes it. And this cycle, as ITC pointed out, the prices have come down as well. So going forward, if they maintain their volume momentum, EBITDA margin expansion is also just a matter of time. The important part, however, is that about a few quarters ago, the company had set its sight on looking to sell its retail business. So they're looking to strategize growth of their tobacco business over the others, and that's what's playing out. It's not just today. Over the last 1 year or so, the stock has been a big mover. In fact, in 2025 itself, it's up almost 90%.
Well, thanks so much for that, Mangalam. Big moves on Godfrey Phillips, but then shifting focus to new debutants on the bourses today. Aditya Infotech saw a stellar listing at almost 50% premium. In fact, we also spoke to the management earlier today on the margin outlook. Let's listen in to what they had to say.
So margins are around 8.5% EBITDA, and like Anup mentioned, 20% is of our own brand, and the balance is we continue to distribute another brand from China. But with this new regulation and tailwinds, a large chunk of our business will move to our own brands where we have a better margin. So I think we believe it might go to a 90-10 because the neighboring country brands cannot qualify for selling IP cameras any further with the new regulation. So their play will only remain in the analog camera technology, which is more like a flat market.
The new listing, Aditya Infotech, 60% higher now in comparison to its IPO price. Now, sources are telling CNBC TV18 that Finance Ministry is in talks with SEBI to take steps to reduce the options market speculation. Yash is here with more details on this. Yash.
Well, CNBC TV18 had reported it earlier that market regulator SEBI was looking at different ways to do two things. One was to reduce options trading volumes and the speculation there. And the second one was to increase cash market volumes. Now, what we've been given to understand as fresh piece of information is that Finance Ministry has also been in discussion with market regulator SEBI to consider options to reduce options market speculations and the volumes there, and of course increase the cash market volumes. The letter has been sent from the end of Finance Ministry to market regulator SEBI to consider steps in order to do this exact same thing. That is, as I said, to look at reducing options market volumes as well as the speculation there. Now, according to our sources, SEBI has also been considering various steps to be able to achieve this objective. The first one is that market regulator SEBI could consider doing away or removing the weekly options expiry and replacing that with either bi-monthly, which is fortnightly, or a monthly expiry. That could be a big move which SEBI could consider. The second option which SEBI is considering is reducing cash market margin requirement. Currently, of course, the margin requirement towards cash market transactions is higher as compared to options trading, and that is one step which SEBI could consider, which is to incentivize cash market transactions by reducing the margin requirements there. The third option which market regulator SEBI could consider is to reduce, and rather to suggest government to reduce STT or securities transaction tax when it comes to cash market transactions as compared to options market transactions. These are some of the important steps which market regulator SEBI could consider and propose and suggest to the government to take steps towards that. But of course, the government at this point of time thinks that weekly expiry is largely being used for speculation and not for effective hedging, and that's something which it wants to change, and hence discussing steps with market regulator SEBI to be able to do that.
But absolutely, Yash, an important development out there. We'll keep tracking this as and when it unfolds. But for now, we have a lot of these capital market names that are taking a hit. BSE, for example, is down almost 4%. So we'll see how that unfolds. But let's slip it to a very short break. Up next, we get you updates from US President Donald Trump's tariff threat to India. Stay tuned for more. Welcome back. US President Donald Trump took to Truth Social last evening and said he will substantially raise tariffs on India over its purchases of Russian oil. He wrote, and I quote, "India is not only buying massive amounts of Russian oil, they are then, for much of the oil purchase, selling it on the open market for big profits. They don't care how many people in Ukraine are being killed by the Russian war machine. Because of this, I will be substantially raising the tariff paid by India to the USA," end of quote. He, however, did not elaborate on what the tariff would be. Remember, last week, Trump had said that he would impose a 25% tariff on goods imported from India and added that India would also face an unspecified penalty, but gave no details.
Now, following the US President's tariff threat, India has issued a strong response. Parikshit is joining in with more details on this. Parikshit.
The Indian government has tried to set the record straight with the US. They've gone on to say that the actions being taken by the US administration and the European Union against India for purchase of Russian oil are absolutely unjustified and unreasonable. And India will continue to take all measures necessary to safeguard national interest and also economic security. India has tried to remind the Trump administration that we started buying Russian oil after the war began because traditional supplies were being diverted to Europe. Secondly, the Biden administration at that time had encouraged India to go ahead and buy oil at the price cap because it was necessary for strengthening global stability in crude prices. Remember, there were no sanctions on India at that time for the purchase of Russian oil at the price cap that had been decided by US and European countries. Indian imports are necessity compared by global market situation. That's the word coming in from the Ministry of External Affairs. The government has also said that it's very revealing that the very countries who are criticizing India right now and taking action against India for buying Russian oil and energy are themselves indulging in trade with Russia. For example, European Union imports of LNG in 2024 had reached a record 16.5 million tons. US continues to import uranium, hexafluoride, palladium, fertilizers, and chemicals from Russia as well. So India is trying to set the record straight before a domestic audience, but it's also extending an olive branch to the US by saying that we are buying more oil and gas from the US. In fact, crude oil imports from the US are likely to go up by 150% year on year in FY26 itself. The trade negotiators will be talking later this month, but the word coming in from industry bodies and experts is that there is a need to dial down the rhetoric. It is important to have some clever diplomacy on the table and look for ways to save and protect this long-term strategic partnership, which is very critical for India.
Well, thanks so much for that update, Parikshit. But let's move to a very short break. More news and updates on the other side.
Welcome back. The Reserve Bank of India's Monetary Policy Committee will announce its interest rate decision tomorrow. CNBC TV18's poll shows that the market is divided between a rate cut and a status quo. Ritu is here to tell us what to expect from the policy.
The RBI's August policy meeting is shaping up to be anything but predictable. A CNBC TV18 poll of top economists shows a clear split. Half expect a 25 basis point cut, while the other half say the MPC will hold rates steady. But zoom out and look at the broader macro picture and you'll see inflation has dropped to a 77-month low. CPI is likely to average below 3% through the year. And so some like SBI, for instance, warn that not cutting rates now could be a costly type 2 error, essentially waiting too long and hurting growth when inflation is already under control. But most economists, that is 70%, see the terminal policy rate settling at 5.25%, which means one more 25 basis point rate cut is going to wrap up this easing cycle. On the timing of the rate cut, the poll is split. 30% say August, another 30% October. December leads at 40%, but signaling we're near the bottom either way. On the stance, though, there is no ambiguity. All expect RBI to stick to a neutral stance. But speaking of growth, here 70% believe RBI could leave the forecast unchanged at 6.5%, though the street does expect RBI to flag signs of slowing momentum. On inflation, 90% expect a downward revision to RBI's 3.7% forecast, possibly to around 3 to 3.3% because of the easing food prices and the favorable base effect. As for the tone, 60% expected to stay neutral, but 40% are leaning towards dovish. But the wild card in all of this is tariffs and trade tensions, where half of the economists see no policy impact, while 40% do say external headwinds can push RBI to ease further, but they do agree mostly it's still a wait-and-watch game. Finally, do keep an eye out for the revised liquidity management framework, any commentary on the growth narrative, and the possible extension of the EBLR, which is the external benchmark-linked lending rates, to NBFCs as well.
Well, thanks so much for that, Ritu. But moving on to the latest update from West Asia, amid mounting domestic and international pressure for the release of hostages, Benjamin Netanyahu will convene a meeting of his security cabinet this week to decide the Israeli military's next step in Gaza. Take a look at this report.
Benjamin Netanyahu said on Monday he will convene his security cabinet this week to decide on Israel's next steps in Gaza. The announcement follows the collapse of indirect ceasefire talks with Hamas. One senior Israeli source suggested more force could be an option. On a visit to Israel, U.S. Middle East envoy Steve Witkoff had said he was working with the Israeli government on a plan that would effectively end the war in Gaza. Talks in Doha had aimed to secure a short-term ceasefire that would see an influx of desperately needed aid to more than 2 million civilians, many of whom are gripped with acute malnutrition. Health authorities in Gaza said at least 40 Palestinians were killed by Israeli gunfire and airstrikes on Monday, including 10 seeking aid, adding another 5 had died of starvation. Video obtained by Reuters showed Palestinians running from gunfire near a Gaza Humanitarian Foundation aid distribution site in central Gaza on Saturday. Israeli officials have floated ideas including expanding their military offensive and annexing parts of the war-shattered enclave. Israel's Channel 12 on Monday, citing an official from the Prime Minister's office, said Netanyahu was inclining towards expanding the offensive and seizing the entire Palestinian enclave. Israeli Army Radio reported on Monday that the country's military chief has become increasingly frustrated with what he describes as a lack of strategic clarity by the political leadership. A spokesperson for the Israel Defense Forces declined to comment on the report, but said that the military has plans in store. Hamas has repeatedly said it won't lay down arms, but it has told mediators it was willing to quit governance in Gaza for a nonpartisan ruling body, according to 3 Hamas officials. It insists that the post-war Gaza arrangement must be agreed upon among the Palestinians themselves and not dictated by foreign powers.
Well, with that, we call time on this edition of Business Lunch. From Amak, Shimi and the team that put this show together, thank you so much for watching. Numbers of Excite at the bottom of your screen. The market too nearing the lows of the day. Mid-cap radar takes the action forward on the other side.